Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 10th of February 2019 and we're providing our gold and silver weekly update for the week ending the 8th of February. Gold fell $3 last week from $1,318 to $1,315, having hit a high of $1,325 and a low of $1,302. In sterling terms, gold finished the week at £1,016. That's up £9. And in euros, it closed at €1,161. That's up €10 on the week. Silver fell 5 cents, from $15.90 to $15.85, having hit a high of $15.93 and a low of $15.65. In sterling terms, it closed at £12.26. That's up 10 pence. And in euros, it closed at €14. That's up 0.12 euros. The gold to silver ratio rose slightly from 82.9 to 1 to 83 to 1. The Dow Jones closed on Friday at 25,106. Down 63 points on the day, but up 43 points on the week. And the NASDAQ closed at 7,298, up 9 points on the day and up 35 points on the week. And the S&P 500 closed at 2,707, up 1 point on the day and up 1 point on the week. Brent crude fell 65 cents, from $62.75 to $62.10. And US light crude rose 46 cents from $55.26 to $52.72. The dollar index stands at 96.63. That's up 1.06. Gold markets opened weaker at the start of last week, more or less continued its descent until Thursday, and then recovered again on Friday, but still not quite sufficiently to post a gain for the week. This move on Friday was quite impressive in that the dollar strengthened quite considerably, and under normal circumstances gold would have fallen back much more. From a technical point of view, gold is forming what analysts call a bull flag pattern, which is normally considered a pause before its price pushes higher. There is support at 1311 and additional support at 1300, which is near the 20-day moving average. However, the medium term is seen as negative, as the MACD index generated a crossover sell signal. As we said last week, we foresee a period of consolidation, with prices moving within a relatively tight band. Many technical analysts see 1325 offering some resistance and 1350 offering considerable resistance. On the downside, as mentioned, 1300 is supportive, and 1275 appears to offer strong support. On Thursday, the European Commission sharply cut its forecasts for Eurozone economic growth this year and for 2020, on expectations the largest countries within it will be held back by global trade tensions and domestic political and economic issues. The Commission said Eurozone growth will slow to 1.3% this year from 1.9% in 2018, before rebounding in 2020 to a still rather unimpressive 1.6%. Protagonists of an imminent dollar collapse will be disappointed to see that this global economic uncertainty has resulted in funds moving towards, as opposed to away, from the US dollar, as, believe it or not, it is seen as a safe haven compared with other currencies. And this is a trend we can see continue to occur while other currencies are in difficulty. This brings us back to our hobby horse. Currency strength and weaknesses, as far as international markets are concerned, are predicated by their interrelationship with other currencies. Currency values often in a free market economy, are often seen as a self-correcting measure. If your economy is weak, generally your currency will fall, making your exports cheaper, thereby improving exports and strengthening your economy. Now, this may take many months or in some cases years, but this is a factor that many so-called end of the dollar prophets appear to forget. The US national debt is high, that is true compared to its GDP, but many other countries are worse. The US Fed has recently stopped quantitative tightening, while many other countries are actively adopting quantitative easing policies, and therefore a combination of the two, plus other factors, are causing other countries' currencies to fall relative to the dollar, thereby making the dollar attractive to currency holders and investors. It's not rocket science within the economic community and is almost a given, but it seems to completely wash over the heads of pundits who claim that they understand economics and that the US dollar is about to collapse, and you should therefore buy as much gold and silver as you can right now before it's too late. Frankly, it's absolute rubbish, and you listen to it at your economic peril. Just remember, these pundits have an economic or financial advantage in your following their doomsday scenario-led advice, as they are either in the precious metals trading game or publish reports and books in that sphere, and need some major scary headlines in order to increase activity and therefore their sales, most of which are denominated in US dollars, the very currency they claim is worthless. Yes, we at Illuminati Silver will always attempt to accept currencies which we believe are going to fall off a cliff tomorrow. Makes sense, doesn't it? Hopefully we make our point. Even the Reserve Bank of Australia on Friday expressed dovish tones by hinting at a possible rate cut later in the year, thereby limiting demand for gold by making the US dollar a more desirable asset. In addition, US trade officials announced on Thursday that deliberations between the US and China are still quite far apart, and President Trump and President Xi may have to delay their planned meeting to announce such a deal, which was originally scheduled for the 2nd of March. And this is concerning for world trade. However, and ironically, whilst one would expect this to adversely affect the dollar, evidence so far appears to suggest that it strengthens it, as investors worried over contagion are currently viewing the dollar as the better bet in this economic war. So we shall have to watch this one quite closely. Like gold, silver markets initially fell at opening, recovered quickly, and then fell back again until its rise again on Friday. It looks like the $16 level is quite resistive, which was something we expressed 2 reports ago. That said, if we do achieve another close above $16, then that will prove bullish for the metal. Again, though, we reiterate what we said last week. Expect some consolidation within a dollar range of somewhere between $15.50 and $16.50. However, what is a little concerning about silver is that we have had the Fed halt its quantitative tightening course, we have entered the Chinese New Year, and yet silver still has not risen to the levels that even we thought were possible. And most know we are generally very conservative on silver price rises at the moment. It would be quite amusing if David Morgan one day states on his podcast that Illuminati Silver are too bullish about its silver forecast. Okay, we're stretching reality there a little. Let's take a quick look at last week's US economic data of relevance. The ISM non-manufacturing index for January came in at 56.7% against a forecast of 57.4% and December's figure of 58%. Disappointing, to say the least. The trade balance for November showed a deficit of $49.3 billion compared with a forecast of $53.7 billion, and consumer credit for December was 17 billion compared with November's 22 billion. We shall be interested to see January's figures for this. Next week, economic reporting of consequences as follows. On Tuesday, we have household credit for Q4, and we can compare this with the previous report of 4.3%. On Wednesday, we have the Consumer Price Index plus core inflation for January. Watch out for these two, plus the federal budget for December. On Thursday, retail sales for December, important, plus the Producer Price Index for January, also important. And on Friday, Import Price Index and Industrial Production figures for January, plus the Consumer Sentiment Index for February. So really, Wednesday and Thursday figures are perhaps the most important to watch out for, but industrial production figures for January on Friday are also worth paying attention to. We are still awaiting an updated COPT report, that's the Commitment of Traders report, to be published, and we'll cover this in some detail when it is eventually released. So let's take a brief look at currencies, and if you look at the screen, the first one is showing the pound sterling versus the US dollar over the last 7 days. You can see at the start of the week, the pound started at 1.3079 US dollars to the pound. Notice then how during the course of the week it gradually fell, rose slightly on Thursday, but fell back again on Friday, closing the week at 1.29371, if you want to be precise, dollars to the pound. So it's basically moved from 130 to 129. This is part of the reason why gold prices in sterling went up, but in US dollars went down. Let's now compare the euro to the dollar over the same period. A more flat reduction, but nevertheless a reduction again. As you can see, starts at 1.145 and falls to 1.321. Again, why the price of gold and silver rose in euros but fell in US dollars. And as we mentioned earlier in this broadcast, let's try and take a look at the Australian dollar. And you can see immediately this significant fall here in the Australian dollar. Basically, because of the announcement that it was not going to raise interest rates, and more importantly, it was likely to lower them during the course of this year. And you can see that you started the week at 0.7250 and coming down to 0.70, which again is why gold is going up in Australian dollar terms, but falling in US dollar terms. And this is very important, because most of our viewers and listeners and subscribers are from the United States. Much of our reporting is predominantly based on the US dollar value. And of course, because gold is fundamentally priced in US dollars. That doesn't necessarily mean to say that the trend in the US dollar rate of the price of gold and silver is going to be exactly duplicated in other currencies and in other countries. And we try to cover these where we can, which is why we frequently mention the Eurozone and also the United Kingdom. We appreciate we're not covering every country, and we apologize for that, but it would make the videos extraordinarily long. But having said that, the three major currencies, and I suppose in time perhaps we should consider the yuan, although we're not totally confident of the yuan's future at the moment, and we can discuss that again in another video. But that just shows us the strength of the US dollar. Next week's video which, subject to popular demand, we shall also offer for free, but for the last time. And we shall include a technical analysis application and appreciation of both gold and silver. So if you are interested in basic technical analysis, then make sure you tune in. Meanwhile, for Inner Sanctum members, please do not forget to visit our website at illuminatisilver.com, as we have a number of premium videos and articles included there, which have been updated this week. And also, if you haven't registered, either for free or paid membership, please make sure you do so, as we are sending out a free PDF to all members on cryptocurrencies. And they will be sent by email. So if you haven't registered, then clearly we cannot send you the email. Have a great weekend. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.